Hey guys, it's Kevin. It's Saturday, April 30th, 2016, and I am going to review the trades that I made this last week, which was the trading days of April 25th through April 29th. Want to see what I did well, what I could have done better, and just try and improve. So I've got my full trade list here on a Word document. I made 18 trades this week, and I am going to type up summaries of each trade and just kind of self-critique myself based on hindsight. Obviously, now that the week's over, can look back and see, oh, okay, that's what I saw, or why did I do that, etc. So the first trade that I made was on Netflix, and I entered a short trade at 9:43 and 33 seconds. So I want to go back and look here on Monday 4:25 and see what I was looking at. So first of all, Netflix had come into the week downtrending, and looks like the stock started out with a slight gap down on Monday to start the week and stayed below 96 bucks, immediately went lower and then tried to bounce back up, but then got rejected here at the high from the first couple minutes of the day. So I like that rejection right there. So I see why I went short. I saw this initial move lower and then a bounce, and then this candle here, just a really nice drop from 95.60s down to 95. So as soon as I saw that, I placed my short trade, and I shorted 50 shares at $95.40 at 9:43. So it looks like I shorted this bounce on this candle here, which was a good short. I like that I didn't chase this move down. Instead, I kind of waited for the bounce back up. So it's first note that I'm going to make here. Nice job waiting to observe the 96 rejection and move back to 95. This set up a clear level to trade against in the form of that $96 level, or the current high a day, which was like $95.70. Didn't chase, shorted the bounce off of 95. So good job on the entry. Really like my entry. Solid entry. And I covered the position at $94.80, which is good. This was a 50 share lot, and I have a rule that on my 50 share lots I have an bracket order automatic of a 60-cent profit target and a 40-cent stop loss. So covered at my 94.80. Use bracket order to cover at 60-cent target, and just in looking at that, looks like I got filled into these new lows here. So good job. I like the fills. I like that first trade of the day. Now if every single trade this week would have been as good as that one, I would have been in good shape. One thing that I do notice here though, my next trade of the day was on Netflix later on, but it wasn't until 10:30, and I could have looked at shorting this bounce right here versus 95, that bounce off the low. So I'm just going to make a little note that need to consider reshort levels right away. What's my next trade? Is there another trade, or is it not providing good activity? Need to make that decision. Okay, so next trade actually wasn't on Netflix. It was on Tesla at 9:48. I bought 10 shares of Tesla at 254.60. So let's see what was going on with Tesla on Monday morning here. So Tesla, okay, I see what I saw. Tesla opens up and makes a big move higher here, and that definitely caught my attention. You went from 253 to 257, so I liked my setup kind of versus the 255 area. So then I entered my trade at 10:05, or sorry, no, I entered my trade at 9:48. So at 9:48, that was this kind of pullback right here. So I like that I waited. I didn't chase this move here, this initial move up. I waited for a pullback and then was kind of trading versus the 54 to 55 range, it looks like. The low of day was 52, so I didn't want to get back down near the low. So again, fine with the entry, good entry setup in my opinion. Didn't chase first move, waited for a pullback. Now I end up selling the position at 10:05 at 253.19. So 10:05, that was, if we zoom in here on the overall action, so 10:05 was right about here. So I see why I sold it. The one thing that I would say I could have done better is once I see this inability to get back above 255, because ultimately that's what I was looking for. I was looking for a hold above 255 and then a move back up to the high at 257. Once I see this inability to hold 255, I could start considering an adjustment there. So I like that I, minimized the loss, but I could have been even more proactive. So good job minimizing the loss once it started to break to levels you didn't want to see. But it could have been even more proactive once I saw it failing to hold 255. So, okay, not great. All right, next trade was back to Netflix. I shorted Netflix at 10:34.04 on Monday. So let's go back to Netflix here. See what I saw. So stock's in a downtrend on the day. Remember, I had shorted it in the morning already, so I like that I'm revisiting it here, and looks like I shorted this bounce. I shorted it at $94.50, so I got short on this bounce. That's a great entry, very good entry. Again, I like that I didn't chase the new low. Missed an entry right here, but that's fine. Didn't chase the move down, waited for a new entry. And what I really like with that is 94.50. I love shorting at 50-cent levels on a stock like Netflix, either at 50-cent levels or $1 levels, so 95, 95, 50, 96, 96.50, etc. But what I also really like about this is check out how the low from the first 30 minutes of the day on Netflix, it was right around $94.50, $94.60, what I'm marking number 1 right here. And if we just expand that over, you can see that this bounce, what I'm marking number 2, gets rejected right there. So support around 10 o'clock turned into resistance around 10:30. So very happy with that entry execution here. I think I did a good job observing that, number one, the stock's in a downtrend, so it's setting up for further downside action. And waiting for my re-entry on the short trade. Nice resistance at 94.50, which had been support around 10 o'clock. The other thing I really like here, which might go unnoticed, is my first trade of the day. I shorted Netflix at 95.40 and covered at 94.80. My next short on Netflix is at 94.50, which is 30 cents below where I covered it. I've had a really hard problem in the past shorting a stock below where I last covered it. So like, for example, I covered it at 94.80, so in the past I'd say I'm not shorting it below 94.80 because, I should have just held on to the short. Well, what I see that I did here is I didn't make that excuse. Maybe I should have held on to the short, but you know what? There's a new short right here, so who cares that it's lower? This is still a good trade, just like the first one was a good trade. So I really like that I didn't get stubborn and ignore the possibility of a good trade here. Even though the price was lower than my cover from earlier in the session. So then on that trade, I covered that at $94.15, so 45-cent gain, not my 60-cent targeted gain. Let's see what happened here. I covered at 10.45. So I covered into this drop here, and quite frankly, this is just a bad cover. It looks like maybe I just got impatient. I'd been in the trade for 10 minutes, which may or not be a long time to some of you, but that's on the longer side for me. I need to get better at that. So no reason that I needed to cover at 94.15. My target was 93.90, and I would have gotten that target. In fact, the stock ended up dropping even further over the next few minutes. So poor job on the cover. Maybe I got impatient or scared or something, but whatever it is, need to get better at that. Seems like one of those covers where I didn't have a real reason for covering. It wasn't at my target, and as the chart shows, it wasn't reversing either. It's not like it started to come back above 94.20s or 94.40s and make higher lows, higher highs. I could understand if I had covered it because it was showing signs of bottoming, but this just looks like impatience and a fear of a reversal that isn't yet there. So need to work on that. All right, next trade of the day. Okay, I didn't make any more trades on Monday the 25th. Moved on to Tuesday the 26th. So let's see there. Again, I was shorting Netflix on Tuesday. And just to be clear, the purpose of this video isn't to review trades that I could have made. Look, I didn't make any more trades on Monday, so I'm just moving on. I'm not going to look back and be like, oh, I could have done that, could have done this. No, my focus is on what I did do and what I could have done better. I don't think there's much to be gained by coming up with imaginary trades that I could have made. So this is Tuesday the 26th. Looks like I shorted Netflix at $92.94 at 9:38. So let's see what we got there. So again, stock gaps down here on Tuesday's open, and very similar setup to Monday. Just makes an immediate move lower, which I like. So I like observing that. And I just like the pressure. Also, Netflix was below yesterday's low at this point, and it was also below last week's low at this point. So it just had the feel of a breakdown in the works. And again, I don't chase the move down. I shorted it at 9:38 at $92.94. So I shorted this candle right here, and that's just a beautiful short. So another good entry not having any trouble with my entries, at least so far. So once again, good job observing the move down at the open and kind of feeling or sensing the breakdown, whatever you want to call it. So great short on bounce. And again, 92.90 right in line with one of those dollar mark levels. So I like that. I shorted 92.94. Just mentioned that I like shorting at 50 cent or going long at 50 cents or $1 mark. So I like that I'm getting a short right there on that bounce, where then I can kind of use 93 as a reference point. I covered the trade at $92.34, which was 60 cents, and that's my profit target on a 50 share lot. And again, that's predetermined. It's done with a bracket order. 50 share lot, it has a 40-cent stop and a 60-cent target. So covered at 92.34, looks like, and that was at 9:51, so my fill was right here. So awesome fill on the cover, and that's the benefit of having a bracket order. So this is my best trade so far. Great cover at the target, and there's nothing better than when you cover and the stock immediately bounces up. Look at that bounce, covered at 92.34 and immediately comes up back to 93. So really like that. Good use. I'm just making a note here that it's good use of the bracket order. Really shows the benefit of that. Because if I don't have that order in, I don't get filled, because the lowest it went was 92.25, and it looks like it was only down there for a second. So good job. I like that one a lot. Next trade was on Google, same day. I shorted Google at 9:36. So let's go to Google. On Tuesday, shorted Google 9:36. Oops, that's not what I want. Okay, so here's Google on Tuesday, and another good job observing the entry, because Google opened at 7:45 with a slight gap, and you can't tell by looking at this chart, but what I knew is that 7:45 was yesterday's high. It was Monday's high, and it was also about the opening price from the day of earnings. So I had 7:45 as kind of a key reference point on Google. And again, with this opening here, what is the first move on Google? It opens at 7:45, and then within the first 5 minutes of the day, it's testing 7:40 to 7:41. So a quick 5-point drop. Quick 5-point drop there by Google, and then this bounce here, and I got short on this bounce. I shorted at 742.65 with a 7-share lot. So good job on the entry, and good observation of resistance at 745, which set up my level to trade against from a stop loss perspective. And then the trade 7-share lot automatically comes with a $4.50 target, and so that makes 738.15 my target here, and it looks like I covered at 10:07. So I was in that trade for 30 minutes, which is very good patience for me, so really happy about that. I really like that I held during all this bullshit right here, just choppy consolidation. I remember being in this trade and I was getting frustrated with the fact that it wasn't breaking below 740. So that took some mental patience for me, and then once it did break, I got my fill right there into this move down. So I really like that, and just another one with pretty good execution. I feel like good use of the bracket order, had a setup, had a stop, had a target, and just making note, excellent patience. That's 30 minutes, very, very good for me. Might sound crazy, but it's just the truth. So I'm not saying very good patience. I'm saying very, very good patience. Just one of the best ones so far. Along with that Netflix one from before. That was a good trade too. Okay, next trade, number 6, was the next day on Google, 727. So let's see what we got. All right. So next trade of the day, I bought 4 shares of Google at 709.50 at 10:19 and 41 seconds. Let's just call it 10:20. So let's see what the stock was doing. So stock made a big drop down, and Google was near a round level. It was at 710, so I like what I'm thinking here with my entry. Also, this chart doesn't show it, but Google at 710 on this day, it was testing 2-month lows. Google, anytime you get Google at 2-month lows, I think it's generally a good idea to look at the stock. So I like what my thought process was here. And furthermore, just a big drop, 720 down to 710 in a 20-minute time frame. That's a pretty good size drop for Google. One of my favorite setups, I have a video about this on YouTube, is 7 or more down candles in a row on a 3-minute chart. And if you look down here, you can see all those consecutive red 3-minute candles by Google. And I got dead bottom on this thing, so that's good. I like that. What's not so good is I only traded a 4-share lot. My minimum lot is supposed to be 7 shares. So the fact that I only traded 4 shares tells me that I was scared. And, why? Why are you scared? Well, I got some friends that would just be like, "Why are you scared, bruh? Why are you scared, bruh?" So why are you scared? I mean, what's the problem here? Great entry, great setup relative to 710, ground level, 2-month lows. Yet you only traded 4 shares instead of your 7 lot. So clearly need to have more confidence in that trade there. So now let's look at the exit. So I sold those 4 shares at 713.05. My target was $4.50. Looks like I took $3.55. So I made an adjustment, and didn't need to make an adjustment. It did, so it looks like I sold right here. Did come back down a little bit, but then ultimately went higher and would have gone my target. So took $1 less than I could have made. Not a huge deal, but in terms of what I'm trying to practice with my discipline and holding for my targets and stuff, it looks like the fear in the beginning that showed up in the form of me only trading 4 shares instead of 7 stayed with me since I took 3.5 points instead of my 4.5 point target. So took profits before target, which again kind of speaks to some fear or lack of confidence here. But need to have confidence because this was really a boss entry, in my opinion. I mean, looking back, the low for the day on Google was 709, 709.08. I got in at 709.50, and as the day progressed, it ended up closing at 720s, and then next day hit 730s. So I got dead bottom, Need to reward myself with that. So definitely could have done better on that. Next trade was on ABBV on 428. So let's look at that. And I know this one. So ABBV had a big gap down. So I bought 30 shares at $58.25, and my 30 share lots come with a automatic 66-cent stop loss and $1 target using a bracket order. So I buy the 30 shares at 932. Big gap down. I buy the gap down. Basically, I'm buying this first candle, and looks like I rushed the entry a little bit. I need to remind myself that off of a big gap down, no reason to buy the huge gap down unless it's showing immediate signs of a reversal. So seems like I rushed the entry. Again, right idea, because I love ABBV long term. I mean, it's one of my favorite stocks. I own it in my IRA account, pays a great dividend. So right idea, buying the big gap down with a stop. Just not as optimal of an entry. Because the problem is since I have that 66-cent stop on the bracket order, I get in at 58.25 and my stop was 57.59. Well, I've told you I like using 50 cents and dollar marks for my trades. 58.25 isn't close enough to 58, and it puts my stop at 57.59, which means it puts my stop above 57.50. I want my stop below 57.50. So if I would have got in at 58, my stop would have been under 57.50. Or what I could have done is, if this goes sideways or if it starts going higher, then I can get in, and now my stop loss is under 58 because this first candle didn't come under 58. But instead, again, looks like I rushed my entry, and because of that rushed entry, I end up getting stopped out on the bottom tick, which there's nothing more annoying than getting stopped out on the bottom tick. And you can see the gigantic rally that it made. So right idea, but just the entry just fucked me so hard here. Even though it's only 20 cents, I'm better than that. So that entry really fucked me because it wasn't close enough to 58, which would have had my stop below 57.50. Stock ends up holding 57.50. You got stopped at 57.59, I believe. Yeah, 57.59. So you get stopped at 57.59. Stock reverses. Just kind of sucks, quite frankly. So entry is everything. Need to remember that my entries are in the context of my stop out, meaning that I want to have it so that wherever I enter the stock, if I get stopped out, it's stopping me out at a level I feel good about. I remember when I got stopped out at 57.59. I remember seeing it and being like, something tells me I'm going to regret that because it's above 57.50. So if I enter at 58.10, my stop loss is 57.39, or I guess 57.45. But regardless, it would have been under 57, so under 57.50. So some things I could have done better here for sure on that ABBV entry. So the next trade then, I shorted ABBV 20 minutes later at 59.50 at 10:02. So it looks like I saw this gigantic move higher here and was just trying to short it. One of my favorite setups is when you go straight up just like on the Google example when you went straight down. ABBV kind of went straight up, 7 green 3-minute candles in a row. So I'm okay with the short here at 59.50. It's right in line with one of those 50-cent marks. But there is one problem here. My share size 75. Oops. Sorry. My share size 75 shares instead of 30 shares. So why am I taking such big size? That kind of feels like a little revenge trade right there. Not keeping my size consistent has been a problem for me in the past, and looks like it was a problem right there. So good entry area in my view for a short around 59.50 after the big spike, but my size is just stupid. It's twice as big as the long trade I just missed out on. Actually, it's 2.5 times as big as the long trade I just missed out on, which again, it has this whiff of a revenge trade to it. Oh, I couldn't participate in the long trade. Well, I'm going to short this sucker back down with some size. So need to avoid that. Revenge trades rarely work out, and as I'll show you, this one did not work out. Just making a note that anytime you make a revenge trade, it's often stupid. And the thing with revenge trading is even when it does work out, it establishes a bad habit. So I covered the 75 share lot at 59.81, took a 31-cent loss, which is bigger than my stop loss is supposed to be. Well, I remember this trade. I didn't have a physical stop loss in. I didn't have a bracket order. Didn't use bracket order. Just a really bad trade from a after the entry point of view. Because again, I'm fine with the entry. I understand why I'm entering here at 59.50 after this big move up. I think I was just looking for a little retrace back down towards 59, and then I was going to look to go long versus 59. So my problem isn't so much with the setup in regards to why I'm shorting it. My problem is how I chose to short it and my execution in terms of size and lack of a bracket order. So those are the notes I'm making here. Okay, next trade, number 9. I bought Amazon on 428 at 620.80, 7-share lot. So let's see what we were looking at here. Alrighty. So Amazon starts the day out higher. Really nice move up here. So I observe that move higher and I think, okay, I want to go long versus 620. And I got in at 10 o'clock. So I bought in right here just about. So I like the entry. I like the entry versus 620. That's the level I want to hold in order to try and get back up on the highs. So, and also I like my patience. I remember seeing this move. Could have chased this move. I try not to chase in general. And could have bought this first dip down to 622, but 622 is kind of no man's land. I wanted 620. I wanted to be as close to 620 as possible. Again, just an example of kind of trying to trade versus around level. So I really like the patience on the entry. Seems that I let the stock come to me at a price I wanted. So that's good. And it was a 7-share lot, so my 7-share lots automatically have a $3 stop loss and a $4.50 target. So I ended up exiting at 622.40, which was not a $4.50 gain, but it was an hour later. So let's see what happened here. Started to get the move higher by Amazon. Started to move higher. I like my patience. Tested 620 a bunch, held 620, and it was at 624. So right here I'm starting to think, okay, it looks good. It's going to get to my 625 target, which is where I was sitting to exit. I was on ask at 625s. But again, I exited at 11 o'clock. And even though I didn't hold for my target and I didn't get stopped out, I like my decision to exit here, honestly, because it just kind of stalls at 624. And I had been in the trade for an hour. Holding a day trade for an hour is a very long time for me. I feel like I gave it an honest chance. I gave the stock an honest chance to perform and get to my target. And once it started coming back down to 622, making some lower lows on a 15-minute basis, I said, you know what, I've had enough. So I'm fine with that. I like that. You know, targets and stops, they are guidelines and they should be respected, but there should definitely be adjustments made along the way. I don't think anything needs to be an obligation all the time. So I gave it an hour and then made an adjustment based on new 15-minute lows and just an inability to get up to my target, which was 625s, within a reasonable amount of time. So I like my adjustment execution here. Good adjustment execution. Next trade, number 10, it was Facebook. I bought Facebook at 1127, 50 shares at 118.88. Let's see what was going on with Facebook. And it was on 428. So Facebook had the big gap up on earnings. And again, I bought it at 1127, so well after the open, a couple hours into the day. I bought it down here in this channel right here. I bought 50 shares at 118.88. 50 share lots, remember, have an automatic 60-cent target. So that meant my target was 119.48. And in terms of the entry, what I was seeing, or at least what I think I was seeing, was the low of day was 118.60. Facebook had multiple chances to make a new low kind of all morning. Number 1, number 2, and then this was number 3. And it was not making a new low. So I kind of took that as a sign of strength. And I also took it as a good risk to reward setup because I knew my stop loss was going to be just under that 118.60, because if it makes a new low, then I'm getting out. So I like where it's at from a risk reward perspective for a short-term trade. I like the entry point. And now I exited Facebook at 119.40 at 11:45, about 17 minutes later. Okay, so this is what I see. Remember, my targeted exit was 119.48. This was a bracket order. I end up exiting at 119.40, and I remember watching this on level 2. It got up to 119.46. No, it got up to 119.47. Literally came within 1 penny of my target, and I was on the ask. This was a live order. Comes within 1 penny of my target, and it immediately came back down to 119.40. I did not like that, and I got a little bit nervous, so I decided to take the trade because I was not gonna. I was gonna be so pissed if it literally came within 1 cent of my target and then ended up coming all the way back down. So again, I like my adjustment here. I like my adjustment. Stock comes within 1 penny of my exit. It was a live ask, which is good. And then I observed a move back to 119.40 that I didn't really like. So I decided to exit. And again, I like my adjustment execution. I had my target, but I made an adjustment once, I kind of saw something that I wasn't in love with. And as it turns out, Facebook did indeed end up coming right back down, so I would have been very pissed off about that. So good stuff there. Good adjustments. Next trade was a Apple put option on 428, the 95 strike put. Bought it at 25 cents at 2:39 in the afternoon. Let's see what Apple was up to. So I bought it at 2:39, which is right about here. So Apple had made a big drop that afternoon. There was news out Carl Icahn had sold his stake or exited his stake completely. So this is the drop on the Carl Icahn news, going from 97 down to 95.70 or so, 95.80. So I saw that big drop. So Apple came on radar, and I was looking for, was it going to be a long setup or a short setup versus 96 bucks, either going long versus 96 or shorting for a 96 breakdown. So I like my short entry. Again, it was right here. So at this point, I suppose I started to think that it was going to break down below 96. As we look at it here, because my entry, again, it was on the 95 strike put at 240. So fine with the entry point. It is an aggressive entry point because I had missed, the drop from 97, but I observed about 40 minutes of action where you kind of stayed between 96 and 95, 96.50. So I feel like I had some evidence of the move lower. So I'm fine with the aggressive entry. Now that's about the only thing I'm fine with, because as you can see, about 4 minutes later, 4 minutes later, I exit that put at 21 cents. I take a $4 loss. Sometimes I wonder why I care so much about $4. I spent 35 bucks on a haircut yesterday, 40 bucks on a haircut yesterday, but I'm not even willing to lose more than $4 on this Apple trade. So I stop out, and I see the stop out. So sometimes you just gotta laugh at yourself. So here's the stop out right here, off of 96, slight bounce. As you can see, it comes right back down, and just another case of why you scared, bruh? You really need the money that bad? So that's definitely annoying. Took a $4 loss, and it's just like, why? Because the thing is, with an aggressive entry on a $25 option, I need to be of the mindset that I'm going to trade it loosely. Because even a 50% loss is only a $12 loss on this. So it just doesn't really seem like I had enough mentality here in terms of what I really wanted to accomplish. Other than to say I didn't want to lose any money whatsoever. And this is probably still the biggest problem I have, that fear of losing money, no matter how little. I mean, this is only a $4 loss. It's so annoying. That fear of losing money, no matter how little it is, too often has me exiting successful trades or would-be successful trades. Because as you can see, Apple did exactly what I was looking for it to do. It gave that 96 breakdown, and look at that move all the way down to 94.20. So just god awful. And again, sometimes you just gotta laugh at yourself, the fact that I care so much about my $4. But that's why I'm doing this, doing these reviews. Next trade was a after hours trade on Amazon. That's fun. So Amazon spiked up huge on earnings. We all saw it, right? So this is the after hours on Thursday. Amazon goes crazy to the upside, hits 670. I short the stock at 670, I believe. Yeah, I shorted 3 shares at 670. I like my size here. 3 shares, you say it's a small amount of shares. Well, guess what? Stocks can move 10, 20, 30 points after hours. So, you know, even 3 shares, I can still make my 30, 50, 60 bucks sometimes. So that's the first thing I like here. I like the very conservative size. Because after hours, you need to be prepared on a stock like Amazon. I think you need to be prepared to lose 10 points, or you need to be prepared to make 10 points. So if I'm going to lose 10 points, it can't be on a 10 share lot, because I don't want to lose 100 bucks, you know, in the blink of an eye. I mean, this first candle is a great example. Look at this move. You go from 600 up to 670. So if you can catch that, if you catch this move with only 3 shares, say you buy the 3 shares at 620, you sell those 3 shares at 640, that's a 20-point move you caught. But if you short 3 shares at 620, it goes up to 670. You know, you're losing a large percentage on that short. So that's why I generally keep my size very small. So that's the first thing that I notice here. I like the very conservative size on this after hours trade. And I like the entry. I really do. I mean, this is a market where technology stocks have been getting killed. Facebook was the first one to really make a big move higher and hold its gain after hours. So I gave the short trade the first advantage, betting that we would see some type of give back, maybe down towards 650 or 640. And after entering, the stock did come down some. It got down to 660, my 661. My bid to cover was at 655. I was looking for 15 points. So initially started lower, but then this move back up right here, not what I wanted to see. So let's see where I covered. I shorted at 401 and I covered at 406 at 668.51. Oh, okay, so this is what happened. Here's the move up. This is the move down. I covered in this range here. And the reason I covered in this range was because it was starting to bounce back up and it just wasn't reacting off of 670 like I thought it would. It wasn't as volatile to the downside. So I end up covering basically break even at 668.51. So I'm fine with it. You know, I tried to trade, and once it wasn't working the way I wanted it to, I got out. I can't use bracket orders after hours. TradeStation doesn't allow me to. Maybe some platforms do. So had to do it manually. So I like the cover once the stock was holding up much better than I expected it to. No harm, no foul type of thing. Tried it, didn't work, moved on. Next trade was the next day. It was on SPY. When I trade SPY, I base my trades off of the ES futures. So I'm going to look at the ES here for my SPY trades. I do not watch SPY when I'm trading SPY. I watch the ES. Alright, so let's check this out. So I bought a put at 9:43 for $1.25. So let's see what was going on at 9:43. So first of all, we were gapping down. So I was giving an edge to the bears. This is the pre-market that I just highlighted. And you start lower, you try to bounce up, but I like this stall out right here around 2065. I like that stall out around 2065 on the ES, one of those five-point marks, just like I like 50-cent marks and dollar marks. When I watch ES, I like fives and double zeros. So 2065, 2070, 2050, 2055, 2060, etc. So I like my setup here. I watched some action around 2065. It seemed heavy, and I was betting on downside kind of versus what had been the high, which was 2067. So good risk and reward entry here on this SPY trade. Good risk and reward entry. I exited it at 153, so I made 22%, but I exited at 947. Now my target was 2060 on the ES, and I exited at 947, so I took profits into the new low. So I did not wait for my target to get hit. My target was 2060. I took profit at about 2062. And again, just a bad case of taking profit because I have profit and not taking profit because the target is getting hit, and not taking profit because it looks like it's starting to reverse on me, unlike some earlier trades where I've made adjustments and I've been happy about this. This is an unnecessary adjustment. It's going to my target, but I micromanage the trade, and even though it's a profitable trade, it's not as profitable as it would have been if I would have held for my target. So looks like I micromanaged and covered before my target got hit without necessary reasoning. Look, it's one thing. I was in this trade for 4 minutes. So it's one thing if I'm in the trade for an hour like we saw on Amazon and I make an adjustment because it's not doing what I want it to do. But this trade was really working right away within 5 minutes of entry. So just quite frankly need to be more patient and have more confidence in that. Because it did go to my target. Next trade was the SPY 207 strike put at 1025. I bought it at 91 cents at 1025. Alright, so I like this here. So ES had made a bottom and had started to bounce, but I felt like it was in a downtrend. So you get this bounce here back to 2060, comes back to 2060, round level setup, and then it kind of comes down. Oh, actually I entered right here. I entered at 1025. So I entered on this candle, and then immediately it goes down. So good entry. I like my setup versus 2060, and initially it reacts well, but then I end up exiting at 86 cents. I take a $5 loss at 1029. I exit once it starts coming back to 2060. Yeah, I understand my exit. Starts getting above this level and ultimately got up closer to 2063. So just kind of started to go higher than the resistance I wanted it to go higher than. So no real problem with that. And again, unlike the Apple trade, it's not where I only lost $4 and I was upset with myself for just being so conservative like that. The difference is Apple wasn't showing any signs of reversing on me. This one was, in my view, showing signs of reversing once it's getting above 2060. Now, ultimately, I end up being wrong. It gets up here and then comes all the way back down. But again, I'm not analyzing that because I didn't know that this was going to happen. I'm analyzing simply how I managed the actual trade I made. So I'm fine with that. Honestly, I think it's one of those where it's a losing trade, but it's a good losing trade in that moment. Good entry versus 2060 on ES. Starts to work right away, but then comes back up and makes a higher high, gets above 2060. I stopped out on that action. Fine with the stop out. And good losing trade, in my opinion. Okay, next trade was on SPY. I shorted a SPY put, the 206 put. So I was betting that SPY was going to stop going down. I was betting ES was going to stop going down. I shorted it at 80 cents at 11.34. So this right here, it's in line with 2050. I short the put. So I'm betting that the 2050 area is going to hold. I like the setup here, but I don't like the decision necessarily because shorting premium on Fridays is extremely risky, especially near the money premium. So I shorted the 206 put at 80 cents, and then 2 minutes later I covered at 91 cents for a quick 13% loss, 14% loss. So I think similar to ABBV, right idea in terms of betting that there's going to be some support at 2050. But wrong way to execute. If I want to short naked on a Friday, I need to go way farther or go farther out of the money or use it with a credit spread. Do it with a credit spread, I should say. Because the problem is that I observe here is I get stopped out 2 minutes later, not even 2 minutes, like 90 seconds. So within 90 seconds, the position has gone against me by 15%. There's just too much sensitivity with naked shorting on a Friday into this volatility where if I'm going to do it, I need to be able to hold through that loss because ultimately it did work and it did hold that 2050 area as the day progressed. I need to have a longer time frame. So just need to figure out a way to put myself in a better spot is the bottom line. Need to figure out how to be in a better spot in terms of the time frame and the volatility aspect. And again, I think the way to do that is with a credit spread or being further out of the money or just accepting a higher potential loss. All right, next trade. Okay, so now this is funny. So I short a QQQ put spread. So I like this because I learned from my mistake very quickly. The naked shorting didn't work, but I still like the idea of betting that the market was finding support around 2050 on the ES. So this time I short the QQQ put spread, the 105 by 105 by 104.50. But there's a problem here. My expiration dates are May 6th. And I hate mistakes like these because it's just so simple. I wanted to short the weeklies. I wanted to short the April 29th. I ended up shorting May 6th. I had no intention of holding the position over the weekend. So why am I using next week's? Honestly, this was just a mistake, quite frankly. When I entered it, I I just was like, oh, you chose the wrong strike, Kevin. So that's why there's just a quick exit there right away. So not gonna review this on the chart. It's just pay attention, bro. What do you look at your strikes. Stupid mistake. Silly mistake. Always be double checking your expiration date. Because this trade did work. The 105 by 104.50 did work on the Q. It's closed above 105. So that April 29th 105 put did expire worthless, but again, I'm in the wrong expiration, so just a silly mistake. Last trade of the day, number 18, was back to SPY at 255. So let's look at ES at that time. Alright, so I had been expecting 2050 to act as support. However, multiple times ES came back down, and then at 2:30 we got this rejection at 2052. So I like that reaction I like that pressure, and I was looking for new lows on the ES at this point. Actually, I had kind of given up on the idea that it would hold 2050, so I shorted this 2050 area, and I was shorting versus 2050 now, as opposed to earlier I was trying to go long versus 2050. So now I was short 2050. I was looking for a low a day test. Stock ES got down to 2047, but then reversed, and my trade in at 65 cents at 255 covered at or exited at 59 cents for a small loss at 306. I exited right here once it started to come back up to 2050. So I like my exit. Questionable trade from the perspective of timing, and is it an easy trade to make? You know, the easy trades, the best move of the day, had clearly already been made on the ES given the drop. So the only thing I question is, should I be still betting on downside, or should I have just been waiting until Monday? Not too upset with the trade because, you know, entry point is fine. Entry point is versus 2050, and my stop loss execution is good. Once it starts coming back up to 2050, I don't like it. So no problem with how I decided to execute. Oh, and this number 16 and 17, by the way, are the two trades that made up the spread that I was trying to execute. So those are both just the silly mistake ones. But on number 18, final trade, no problem with the execution. I think it's a good loss management. The only question is, should I have even been making the trade in the first place? I'm not going to say I should have. I'm not going to say I shouldn't have. It's just something that 3 o'clock next Friday I'll think about more closely. I'll need to look around and say, okay, well, what's your risk? What's your reward here? Does it really seem like there's some real potential behind this trade? In summary, when I look back at these, there's a pretty consistent thing here, and that's that my entries are really good for the most part. Really solid entry points in my opinion. The problem is the inability to get the most out of some of my trades. So just writing down some notes. Very good entry points on a consistent basis. There was really only one trade that comes to mind, and that's the ABBV trade, where I felt like I could have done better. So really happy with the entry points. And I have a lot of improvement in my patience as well. I think the bracket orders are definitely helping, especially on the stock trades. A couple negative points though. Still too many instances where I seem to be too scared of losing money as opposed to just making a natural trade. What I would hope is that I see how good of entry points I'm getting, and I let that give me confidence to let my trades play out on a fuller basis. But overall, I felt like it was pretty solid execution. Just need to get more out of my winners and clean up one or two entry points. Hold for targets. Alright, so I hope you guys enjoyed this summary, and I encourage you guys to review your own trades and see what you could have done better, see what you did well, see where you need to make improvements. Thanks and good luck this week.